All right, so there's not a lot on the calendar this week, but the one main thing I was watching that I highlighted last week coming into this week was the bond market and the selling that was happening in Treasuries. It looks like it might be breaking out of a longer-term downtrend. I've had the yellow lights on bonds and the dollar for some time now. The reason why they were yellow throughout the late summer going into the Fed cut was the potential for a big Fed cut to spur repricing of economic expectations in a positive way such that yields start to go up and that you get a different type of steepening. Well, that's happened, and now at this point I think we have to recognize some momentum that is building. I'm not going to change the dollar quite yet. Usually they go in sync, but let's see, kind of hedging a little bit, because when we've got long-term trend lines, oftentimes you're going to come back and kind of test them, which we'll return to in a moment, that concept with the crypto green light. But firstly, look at the 10-year, the 6-month line that we've been looking at broke, basically. It came all the way down from the spring. April was the high there, and it was very well adhered to and contained a very long period of trading. And now that we're going above it with a gap higher breakout, and then the fact today again, there was no news. Yesterday, there wasn't really much besides Cash Kari's commentary, which was fairly vanilla, that I think we should all kind of assume that the Fed is not just going to go cut, that they're going to take it piecemeal. They're going to do it depending on the data, which is totally reasonable. If the data has been beating expectations, which it is, then there's some good momentum for yields to keep going higher. Now, what could push back is if maybe the stock market runs into some trouble. But what's really important here are a few things. Number one is at the bottom of the 10-year yield chart is exactly when the Fed cuts. There's a lot of charts going around where people are trying to overlay election polls and stuff, and I would really be cautious in drawing too many conclusions. To me, this chart is very well explained, almost the entirety of it, if not all of it, by economic forces, by Fed decisions, by a big, deep cut that is pro-cyclical in nature, and so you reprice growth. It's been a bear steepener, not the bull steepener. That is a reflection of growth potential. The 10s to the 2s spread now is getting a little pinched in the last couple days. It's starting to flatten again because the 2-year is coming up now. So that could potentially cause a little bit of disturbance within equities, but so far it looks limited to the stuff that's very sensitive to rates, which is small caps, which is some of the regionals, and those charts have done really well, so I'm not too worried about what this means for stocks just yet. The other thing too is that we haven't had a lot of extra term premium built in. There hasn't been anything here that's inexplicable by either the economic data, which is going up and to the right. The curve basically perfectly correlates with the economic surprise rate in the U.S., which we saw from Jeff Kleintop this morning is better than the rest of the world. You don't have to have some fancy explanation. People love to take what happens in the bond market and apply whatever their political bias is or their monetary bias on what they view. It's pretty straightforward here. The Fed delivered a big cut. It's stimulative in nature. The economy is still holding in. It's had some rough patches, but we got some good data points, and we've continued to see analysts too bearish, and thus the idea of a yield curve widening out, yields going up. You don't really need to include some political speculation or who's going to do what in office or what a Trump policy means or maybe not. As I said, I think crypto is kind of the only thing right now that you could logically argue maybe does get affected by all the commentary. But even that chart too is a good example of why you draw lines kind of thick sometimes. And so as an example, I've kind of just shifted up the previous line that I had. You can still argue it's in a downtrend. I'm not going to do that though. I'm keeping the green light on there until something changes. But that might have been a more kind of short-term thing. We'll see. I think the bond move is more convincing. So it's a red light on bonds. Look for the dollar to go green soon too if the dollar keeps holding strong. Have a great night. I'll see you tomorrow.